Welcome back. You're watching us here on Bazaar Morning Call. The GIFT Nifty indicating a positive start. A lot of stocks on our radar, but let's focus on the metal space. The metal stocks have been buzzing lately with Hindalco, JSW and Tata Steel being among the top Nifty gainers. Yesterday, we had commentary coming in from Anil Agarwal of Vedanta as well. The metal index is up 25% this year so far. So what's the outlook on the sector? Amit Dixit, who's the analyst at ICICI Securities, joins us now. Amit, stocks have begun to do well. I was, going through your note. While Tata Steel and JSW Steel are consensus buys, you believe that they can actually outperform what the street is factoring in as well. So if you could explain your rationale here and the upside risks.
Yeah, so rationale we have essentially on the domestic consumption growth. So see, for the first time ever, perhaps in the sector, we are seeing that steel companies are adding capacity without adding any incremental debt. That is point number one. Point number two is that the domestic consumption growth is quite supportive. So if you look at last 3 years, FY22, 23, 24, we had a double-digit consumption growth. And despite it being the peak of election month in April, the growth in steel consumption was actually 9.5%. So clearly domestic growth is supportive. Number two, what we have seen that there is a slight disconnect between Indian prices and Chinese prices. And when I say disconnect, I mean the elasticity of prices. So therefore, we have seen that the domestic spreads actually have bottomed out in Q4 FY24. And Q1 FY25, as we look at it, coking coal prices have come off. So therefore, the spreads are likely to go up. Consumption is supportive, as I said. And there are companies who are adding volumes in FY25, starting with JSW Steel. So therefore, that makes us positive on the steel space as such.
Okay, so you're positive on the steel space. So JSW Steel and Tata Steel, Amit, what kind of upsides do you see on the stock? What kind of earnings upgrades are you looking at?
So in case of JSW Steel, so it is the company that is adding maximum incremental volume in FY25, which is around 2 million tons, and 6.5 million tons of incremental capacity is ready. So essentially, FY26 would be the year when you would see JSW going full throttle as far as the production stroke sales growth is concerned. So if you look at that parameter, I think the consensus numbers are still around 10 to 15% lower on EBITDA for JSW Steel. And therefore, from the current levels, we easily see an upside of around 25% in JSW Steel. Our target price is 1140 for the stock. As far as Tata Steel is concerned, quarter after quarter, you will see the positive earnings from the European operations, starting with Tata Steel Netherlands becoming EBITDA positive in Q1 FY25, and with the lower iron ore prices and coking coal prices supporting, UK operations would also become EBITDA positive, possibly by Q3 FY25. Having said that, the restructuring of UK operations will also have a role to play, and we will see the concerns of the street that have been around the profitability of UK operations recede a bit, and that would be positive for the stock. Definitely, domestic operations is as robust as ever.
What's your view on the non-ferrous space?
Yeah, so non-ferrous space, we are positive on Hindalco at this stage. We have a sell rating on Nalco. And the reason being that if you look at our overall picks or the kind of, the rationale behind the rating, we are positive on the stocks that have got incremental volumes or, the growth in terms of their sales volume. So to that extent, we see Nalco lagging, but Hindalco, we have a positive view. And the reason behind this is very simple, that Hindalco is adding downstream capacity in domestic operations. As far as the US operations go, we have seen EBITDA per ton hitting back at above $525, and it will continuously improve. Of course, a Bay Minute will come in FY27, but that is something for the later stage. And something that will also support aluminium prices in particular is the low inventory level. As far as the impending impending, tight market balance because of Chinese smelters not being able to ramp up production. So I think that is quite positive for the non-ferrous space. And I think we are quite positive on Hindalco in this particular gamut.
All right. And finally, before we let you go, do you track Vedanta? The stock did extremely well in yesterday's trading session, benefits from a whole host of commodities. We had the commentary coming in from Anil Agarwal as well, and he did speak about the impending demerger.
See, in case of Vedanta, what we see very clearly that the company is on there are twin plans. One is that in aluminium operations, you would see continuous improvement in cost. As far as the zinc operation is concerned, you will see continuous improvement in volumes. So cost and volume in two discrete divisions will play a very important role. In fact, in case of oil and gas, after this ASP injection, we could see actually oil and gas production also ramping up. I think these are the positives for the stock. Operationally, we are quite positive on Vedanta as well.
Okay. Well, I just had one follow-up question. You said that one of the strongest stocks in terms of, adding capacity is JSW Steel. They're adding 2 million ton volumes in FY25, and you spoke about an upside of 25% on JSW Steel. I didn't get the upside on Tata Steel. What is the target price? What's the earnings upgrade that you're looking at over there?
Yeah, so in case of Tata Steel, our target price is 210 rupees. And in terms of earnings upgrade, again, we see that consensus has still not factored in the possible improvement in European operations. See, the proof of pudding is in eating. And therefore, we believe that a couple of quarters when, Tata Steel Europe will possibly show good result, we will find that the consensus also will upgrade its earnings as far as the Tata Steel is concerned. But on EBITDA front, I see an upside of around 12 to 15% on FY26 consensus estimates.
All right. Thank you so much for joining in, Amit, and giving us your view on the metal space. Definitely positive on a whole host of stocks out there, ferrous, non-ferrous, as well as Vedanta. Just keep an